$5 trillion. That's the amount controlled by Fidelity, and although it doesn't control as much as other companies like BlackRock and Vanguard, it has a structure that places much more power in the hands of a single family, which makes it more impressive. This is because, despite controlling more assets, the competitors have their capital quite diluted, being publicly traded companies with stocks traded on the stock market. Other companies leave few shares in the possession of their commanders. For example, the powerful Larry Fink, creator of BlackRock, holds only 0.27% of the giant, and the situation is similar even in the case of the giant Charles Schwab, where its founder, with the same name, also holds only 6% of the business. However, in the case of Fidelity, it is very different. The founding family controls 49% of the business, which has under custody practically $5 trillion, and decides where the resources of more than 45 million clients go. But how is this possible? How does the Johnson family control so much money? And why is Fidelity so big? In this video, you will understand how this empire was formed and the history of Fidelity Investments, one of the largest investment companies in the world. Fidelity became notable for managing the money of tens of millions of clients in the United States, responsible for managing the retirement plans of 45 million Americans. The company offers accounts that cater to plans 403(b), IRA, and mainly the 401(k) plan, the choice for the retirement of millions of American citizens. In this type of private pension, employers deposit money for the employee, who does not need to pay taxes on the amount. Thus, many people opt for private companies that fit these plans, such as Fidelity, which manages, invests, and then returns profits to its clients. With millions of clients, the giant accumulates all the money and decides where and how to allocate the amount to achieve the best possible gains for the company and its clients. In return, the company receives fees and commissions on the money it manages and the operations it performs. Even though the money belongs to the clients, the power to decide where it goes rests with the business administrator, in this case, the Johnson family. The company is now in its third generation of administrators, currently led by Abigail Johnson, the granddaughter of Fidelity's founder. Altogether, she has a fortune of $35.8 billion, making her the 45th richest person in the world. But this only reflects an estimate of her wealth and does not measure the power and capacity a person has when managing $5 trillion. But how did the company reach this point? It all started with Edward Johnson I, a lawyer who came from a very wealthy family. While working as a lawyer, he also followed and invested in the stock market. Despite this, he was by no means a great investor and experienced both the euphoria of the stock market in the 1920s and saw his fortune sink with the 1929 crisis. However, just a year later, he joined other investors to start the Fidelity Fund, a fund responsible for making various stock market investments. While leaving his money with the fund, Edward pursued his career as a lawyer, but 13 years later, he ended up changing his career after a series of losses and complaints from the fund's investors. The situation was so chaotic that the members understood that it was necessary to elect a new leader for the fund, and thus Edward was elected as the new president and director of the business. In his first 2 years, the fund grew incredibly, going from TR to $10 million in assets. However, despite the apparent growth, one of the factors that enabled this increase was the fact that Edward merged his family's fiduciary fund with the company, which alone made a huge leap in the business's assets. However, the move was seen with extreme optimism by investors, as if the president integrated his family's wealth into the business. It was a sign that the company was serious and would enter the market with full force. With these contributions, the Fidelity Fund became Fidelity Management and Research Company LLC in 1946, effectively becoming the Fidelity the whole world would come to know. Initially, the company behaved like a fund for wealthy clients and offered professional financial management with low-risk investments focused on the long term. Fidelity avoided risks and, mainly, did not invest in businesses or sectors that most were investing in at the time, thus avoiding market trends and fads to avoid sharp fluctuations, neither having substantial gains nor losses. This was how it operated in the 50s, 60s, and almost all the 70s, and only when the founder stepped back did the business change course for an exponential leap. Edward Johnson too took over from his father in '77 and had a completely different vision from his father, deciding to bet not on the quality of investors, but on the quantity of investors. This was because, at the same time, other giants were also making the same decision. such as Charles Schwab and Vanguard. The turnaround included not only a change in the profile of clients, but also a structure to attract different types of clients, including not only wealth management but also services and conveniences like computerized customer service. Besides changing the business focus, Edward II also changed the company's corporate structure, creating a company where 49% of the shares are under the control of the Johnson family, and the remaining 51% are for employees. This mode excludes investors or funds. Only the two-sided parties participate. A few years later, products that would make Fidelity known worldwide came about. The first was in 1982 when the company entered the private pension market by qualifying for the 401k plan, its great asset. Later, it also qualified for other pension plans. The second major success came after Fidelity started investing in technology companies, especially those related to computing. These two moves created a win-win situation for Fidelity, which received more and more money from the 401k, and thus invested more and more in technology companies that appreciated more and more, generating more gains for the financial company and returns on the capital invested and trusted in it. This behavior continued in the following decade with the entry of Robert Posen, an executive who, besides holding positions in the company, became CEO in 1997. With Posen, Fidelity fully entered the market of internet-based companies, known as dot-coms, which skyrocketed at the end of the 90s. During his tenure, Fidelity's portfolio jumped from $500 billion to $900 billion, an impressive number that made the company almost trillionaire and holder of robust equity stakes in some of the largest companies on the planet, which to this day multiply and grow Fidelity's wealth. To give you an idea, according to a recent stock analysis survey, it owns 6.95% of Microsoft, 6.29% of Apple, 6.1% of Nvidia, 2.29% of Google, 2.31% of Meta, and 1.11% of Tesla. It also owns 1.19% of ExxonMobil, showing investments in more traditional sectors, and even 1.7% of Berkshire Hathaway, Warren Buffett's company. Besides being valuable, these stakes allow Fidelity to participate in the boards and decisions of these and other major companies, not to mention the significant returns over time, such as in the case of Nvidia, whose market value increased 11 times in the last 2 years. Another big business would come in the 2000s, the ETF market, publicly traded funds on the stock exchange. In 2003, Fidelity entered the ETF market by launching its first instrument, and later it would secure tens of billions of dollars invested in this mode. However, in this sector, Fidelity still falls short compared to giants like BlackRock and Vanguard. One possible reason for this gap could be that the fees charged are about 10 times higher than some competitors. Another area added in recent years is venture capital. Today, it makes specific investments, such as in the Brazilian fintech Creditas. Currently, besides the cited options, the company also offers services such as investment advisory, mutual funds, fixed income securities, and deposit certificates, as well as other common resources in traditional financial institutions. Gradually, the company is gaining new lines. Since 2001, the heir to the empire, Abigail Johnson, Edward II's daughter, took on the role of president. However, 3 years later, she participated in an unsuccessful coup attempt against her father when she joined other family members to oust Edward II from the company. The coup failed, and she only managed to take over the full command 10 years later. Since 2014, at the helm, Abigail has directed Fidelity towards the cryptocurrency market, so much so that the company offers its own platform for cryptocurrency transactions. Additionally, since 2021, the company created a Bitcoin ETF, which today is the largest of its kind with $9.2 billion invested. According to Abigail Johnson, the expectation for Bitcoin is much more optimistic than the entire market's $1 million per Bitcoin. Do you agree with her, or is this forecast too optimistic? Either way, for almost 100 years, Fidelity has been accumulating more and more capital, with the compound effect taking the business from $900 billion in custody in 2001 to about $5 trillion today. As it receives new investors and gains more from its investments, the company will likely become stronger and more powerful, depending on its history.